we're looking at two things only: 9 to 12, 3 hours; 8 to 12, 3 hours for value gap. So we're going to look at 3 hours now. So this is an example of what I'm talking about. So this is 9 to 12. This is 9 to 12. So we had 3 hours. We had 3 hours fair value gap, which is from year to year, 9 to 12. Then we're going to look at what it happened on 4 hours. So we had both 3 and 4 giving us the same setup. So but price didn't come to fill up, so this trade is invalid. It's a lovely setup, but price must come down to fill up to give us our entry. This is just the belief. So let's continue from here. So we're coming to our chart by 12 o'clock. If we do not see a setup that aligns with what we trade, there is no trade. Now for US 30, it's the both of them, so it must be 3 and 4. There is no alternative. It has to be the both of them. Another example of a trade setup is here. This is 8 to 12. This is 23rd of January 2025. We had a 4 hours IPA 8 to 12. And on 3 hours, let's see what we also had on 3 hours. Oh, great. We also had 9 to 12. So this is exactly what I speak of. This is what we're trading. This is what we're trading. So when you see 9 to 12 and 8 to 12 give you a point, this is what I'm talking about. This is rejection, 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 rejection. Price breaks this candle of rejection. The market has always told you that when price breaks a rejection, when price breaks support, it becomes resistance. When price breaks resistance, it becomes support. That is the theory of the market. So we're going to take advantage of that in align that properly with our analysis so that we can have better trade setups to work with. So this was a potential setup. Price came, retested the level and gave us a run for money, which would have been a good 1:5 or 1:6. Let's look for another setup again on 4 hours. Let's look at another setup on 4 hours. Good, so this is another setup. So in this setup, we had 8 to 12, which is 4 hours IPA. The IPA was from here to here. The candle closed above this level. This is a rejection level, which was a previous resistance that has been broken to become a support, meaning price will come down, reject to give you a buy setup. I'm going to make this thing fast because we're going to address a lot, and I want to do the class in less than 30 minutes. So we're going to be as fast as we can. Let's make as much information passed. So we've seen 4 hours. So let's look at what price was like on 3 hours. Was there a fair value gap? Okay, in this case there was no fair value gap, but we now check 6 hours. Sometimes 6 hours tells us what price will do in the next 6 hours. So in this case, we had 6 hours and 4 hours. We didn't have 3 hours. That is also a potential setup. So we can execute a trade with half of your initial trade setup. So let's look at this one. Now this had 6 to 12. Well, let's look at 4 and 3. So this is 6th of February. This had 8 to 12. The 8 to 12 point of interest was here, and the candle before that was a shooting star, meaning a shooting star indicates this is first of all a supply zone. Price has come there, rejected, giving us this drop. So I'm expecting price to reject again and give us a similar drop. So this candle indicates price is exhausted and price has changed. Rejections here tell me price wants to go. The next candle, which is 8 to 12, closes bearish, and I'm expecting this candle to come above, break down below to give me my setup. And let's look at what 3 hours is telling us. So the same thing for 3 hours. We had 9 to 12. We had 8 to 12. So both 4 and 3 are giving us an IPA. So this is a point of interest for me to take a trade. And price came, did its job, and ran very well. So just the same concepts. 4 and 3. Let's look at this one again. This is 9 to 12. This is 3 hours IPA. This is the 12th of February. And let's look at it on 4 hours, whether we have a 4 hours IPA for that setup, and we do. So we have both 4 and 3 hours telling us the same thing, meaning we have a trade setup about to happen. So price did its best. It came rejected above and it tanked and gave us a good sell. So just like that, we had another setup here again, 8 to 12. What did price do? This is 4 hours, 8 to 12. Let's check if we had 3 hours. So what you have to do is see IPA on both 3 and 4, and when it shows itself, beautiful, execute it. You draw your trade analysis, you draw your setup from just seeing, like, where does the candle close exactly? What does the close of this candle tell me? Has price broken a previous support and has price become a resistant? Has price broken a previous resistance and has it become support? You are trading the same thing, but now you're doing it in precision, meaning you're doing it at a particular time, you're looking for a particular setup, you're looking for a particular reaction, and you're executing exactly the same way. So if you have that same pattern continuously for days, you will definitely master your psychology and master the setup too. So this was another beautiful one. So we had 3 and we had 4. So the same thing, price ran, filled up and dropped to give us an amazing setup. This is what, 460 pips. And what is your risk? Your risk on this trade is 69 pips. So it's pretty nice. It's pretty good. So we have a lot of setups like this. We just have so many of them. So this is what the market does. It does it continuously and it will keep doing it. We have a lot of them, but I want to analyze after NYC bell, daylight shift, when price has shifted from +1, which is now, the bell now rings by 3:30 Nigerian time. So price has gone ahead 1 hour. What that means is that your candles now close differently now. Your candles close differently now because price has shifted 1 hour ahead. So now your interest after daylight shift is one thing and one thing only. You're going to have pre-NYC bed analysis and you're going to have post-NYC bed analysis. Your pre-NYC bed analysis prior to daylight shift was 3 hours and 4 hours. But when the daylight shift, your NYC bed analysis will be 2 hours. So you're looking at price 12 to 2 on your chart, meaning 1 to 3 Nigerian time. Now, 30 minutes before the NYC bell is an indication of price direction. So that 2 hours before that NYC bell rings in 30 minutes is an indication of price direction. I'll give you examples. A lot of them are in here. So let's start from this week. I think this week will be beautiful. Let's start from this week. Let me give you amazing setups. Let's start from yesterday. Yesterday will be very nice. Look at this. So now we already know that the direction of the market already is bullish. Well, we know that because of market structure. We see what price has been doing for days, and we know economic data. We know that the US government has invaded Venezuela and they're going to take control of their oil reserves. That is enough information fundamentally to tell you that definitely when the market opens, it's going to run bullish intensively. So price has moved 1,000 pips plus in the past 2 days, and it has been very, very crazy. And I've hopped and I've got some opportunities and so many more about to happen, because whether you like it or not, US oil will definitely push US 30 up. Compared to US tech, where it's mostly about technology, but when it comes to the strength of the dollar and the strength of the economy, US 30 will always react faster. So I knew market was bullish, but let's break it down. Let's start from, so we're going to take it day by day. So yesterday was the 6th of January, 2026. And what the price do? So this is 12 to 2. So price, first of all, the previous candle was bullish. The market's indication here is bullish. So price came, gave me 2 hours fair value gap, which is from here to the top. Then when the bell opened, price came down, rejected, and broke above this level. Remember, this level is my new support level. A previous resistance level broken, price closed above it. Now price will come down to fill it and give me my buy. So this was my stop loss from here to here, which was 60 pips. Then my interest is price round for 500-600 points, which was a very good setup. I'm going to give you another example again what I'm talking about. This would have been nice, but price did not close above the week. So this is another example. This was 29th of December. So 12 to 2 was an indication that price wants to be bullish. The candle before that was a sign that price wants to change direction too. And what price did, when the bell rang, price came above, hit that level. This is a new resistance level. It was a promo support level that was broken and has become a resistance level. Look at rejection, rejection, rejection. Price breaks, price come back, fills up, and gives me a run for my money. So this was a very nice trade, 298 pips and 36 pip stop loss. So let's keep showing you more. Now, another one that happened again was right here. This was 24th of December. So look at this level was a previous resistance level because price comes, it sells. Then price broke the candle, broke that level at 12 to 2. The next candle will go below. I don't care of how long it goes. I just want it to go down and break back out of the structure on 5 minutes. Remember, this is NYC bell. It moves like this. And I know that definitely above this level, I'm interested in buying, simple and short. So when candle breaks above this level in 5 minutes or 2 or 3 minutes, I execute my buy and let price give me a run for my money. So this was 30, so 300 pips. This was my stop loss, which is 1:10. But understand that my stop loss is dynamic because I only execute my trades after price has broken above the level. My stop loss is when price has shifted. Simple and short. So let me show you another example again of what I'm talking about. This is another beautiful example, but this was short-lived if you look at it. So this was pretty nice, yes. So price broke above the previous candle and gave me a fair value gap. The candle closed above, came down, doing NYC bell, filled up and ran for my money. I was targeting these highs here, and that's what price did. It ran to my highs. So another setup again was right here. So I understand, just like the way we trade what I'm explaining to you is pre-NYC bell. Now we also have post-NYC. Post-NYC bell is the same way we trade 1 hour, which is 2 to 3. So if the bell shifts, it becomes 3 to 4. So 3 to 4 IPA now becomes your point of interest. I'll give an example of what I'm talking about. Let me give you an example right here. This will be very nice for me to explain. On the 9th of December, good. So this was our interest. This was the candle where price, this was 4 to 15, which indirectly is 2 to 3 on your chart. But on Nigerian time, it is 3 to 4. So by 4 o'clock, since our bell is by 3:30, this candle closes by 4 o'clock, which is 30 minutes into the NYC bell. Price closed bullish. And what you understand is this level was a previous resistance level, and price broke that level during NYC bell and closed bullish on 1 hour, which is 2 to 3. On Nigerian time, 3 to 4. So I'm expecting price to come down below here. My stop loss is here. When it comes down below here, rejects here, I'm opening my trade here and I'm targeting the high. So this was it. So this is post NYC bell, 1 hour, 2 to 3 on your chart expenses, which is GMT plus 0. Nigerian time, 3 to 4. That is post NYC bell. So the same post NYC bell for pre-daylight shift and post-daylight shift, just different timing. So it's like it has shifted from 2 to 3, now it's now 3 to 4. That's just the only difference post NYC bell. Then pre NYC bell has shifted completely, which is pre daylight shift. We're looking at 3 hours and 4 hours happening at the same time, IPA. Then post NYC daylight shift, we are looking at 2 hours, which is 12 to 2. So it's as simple as that. That's just what it is. It's just what it is. So in every single section of the market, you are in there, you know exactly what you're looking for, and you're executing your trades in accordance. So let me show you another setup again that also did its work. I think we've explained this particular one. This was a very beautiful setup. This was a very beautiful setup. And if you look at it, this was what? Resistance. When price goes up, it rejects, then it breaks above and comes down to fill up to give you your trade for a buy, which is a clean 535 pips, and your stop loss is 68 points. Still very lovely. So let's go on. Another setup was this, but I remember this took quite a lot of time, but it ran. So this is November. Remember, let me show you this one. This was so beautiful. Remember this. Now look at this. This level generally has become a support level. Look at it. So price comes here, it bounces, but it buys here. So price came here and broke it by 12 to 2. Price came at NYC bell, closed above and went down below. It changed from buyers to sellers. That's when I execute my trade, and it ran 800 and something points. Then my stop loss was 86 something pips. Very beautiful setup. Another setup that happened again was right here on the 12th of November and the 13th of November. So 2 different days back to back, you're opening trades and you're making your cash. So look at this. This level was a resistance. Price broke by 12 to 2. Price came down by the NYC bell, filled up and ran for your money and give you a setup. Another setup I'll explain to you is right here. So this was what? Rejection. And generally, look at it. This was a point where price was selling. It came there, rejected, but printed 12 to 2 above it. Price came, filled it up, and ran for your money. So this was a very beautiful setup. It was 673 pips. Your stop loss was, I used here, was 50 pips, which is very nice. So many setups just like that. Let me show you this one. I remember this one very clearly. This was also 12 to 2. So the price was rejecting. Then 12 to 2, it formed an IPA. The previous candle was also bearish. Price came, filled up that level, and ran to give us our stop loss at 326 points. So just like that, we have quite a lot of examples. Remember, the daylight shift happened by November, but prior to November, price was already shifting behavior by the ending of October towards that certain behavior because it was preparing for that period. So I will most likely just give you maybe from October, just to give you an explanation of what price did. So from October, price began to change direction based on that strategy. So this is 12 to 2. This was previous support. Price broke, came down, filled up, and gave you a run for your money for 370 pips. So the same thing, just like that. But this is October, so my interest will start from the middle of October to see that price is changing direction, which is by 15, 16, price has started changing direction to work for my 12 to 2 IPA. So that was one. Another one again that I remember clearly was this one. This will happen on 17th of October. So this was 12 to 2 IPA. Price came back, filled up, and gave me a run for my money, just like that. Then I remember this very clearly, so I think I'll explain this. This was 12 to 2. This was resistance. Price broke, gave me fair value gap at 12 to 2. It came back, filled it by NYC bell, and gave me 313 pips. Then I remember this one clearly, though it stalled a bit, but it was a beautiful setup. Why? Price has been ranging above this level for a while. Then it broke by 12 to 2, which was right here. Then the next candle by NYC bell should come down, fill it up and go above to give you your trade setup, which was clearly this. Price ran, it gave me 622 pips. Now, before that day came again, price also gave me another opportunity. Here to continue the previous day. So, like back to back, you have opportunities and you see them, you take them, and you make the best out of them. So, this is after NYC daylight shift, which occurs by the first week of November. So, but before that first week of November, by October, the mid of October, 15, 16, price begins to behave. It changes behavior, preparing for that period of time. So by November, you have clarity in executions of 12 to 2 IPA, but you can also see the opportunities present themselves prior to that period. So this particular class is just to make an explanation of the two different times we have the market, pre-NYC bell shift and post-NYC bell shift. The way you should look at your market, remember, it's the same strategy. It's the same. Previous support must become resistance, previous resistance must become support. But now, it's based on time. We trade time analysis. Precision, time analysis. So we're interested in the time. That is why I lay emphasis on post and before. Because the time has shifted, meaning the way we look at the chart will also shift. So take your time and backtest all I've showed you so far and make the best out of it. We are in a new year, so most definitely price will begin to shift gradually to 3 and 4 in the upcoming months. But make no mistakes, the market structure will always preside. Now, I'm going to give you an example of what I'm talking about here. Now, this was the opportunity that presented itself right here. So look at this. This was what? The previous resistance. Price broke this level, gave me an SOB here. My SOB, I'll show you my SOB on 30 minutes. This is my SOB. And broke. So when price comes down, it's just simple. This is previous resistance. It has been broken. SOB is here. Price will come back and retest it. It is as simple as that. There is no special. It's just simple. This is a principle of the market, and we're executing according to the principle we've been taught. So just like that, you can execute very, very simple trades and make the best out of it. I wish you a wonderful time, and take your time to do the work, because without the work, you can't really see results. It's just the reality of it. You must put in the work, you must execute your trades, and you definitely will have something out of it. Let's have a wonderful time, and Happy New Year.